All right, let's get right into it. There's this huge new proposal making waves that could totally change the game for homeownership in America. We're talking about a 50-year mortgage. So, the big question is this a brilliant solution for people who feel locked out of the market, or is it a really, really bad idea in disguise? Let's break it all down.
So this whole conversation really kicked off with this one quote from the Federal Housing Finance Agency, a complete game changer. I mean, that's a pretty bold statement, right? And, as you can imagine, it immediately sparked this massive debate everywhere.
So, that's what we're here to figure out. Is it actually a game changer? We're going to dig into exactly how this thing would work, look at the, well, pretty shocking math behind it, and decide if this is a deal anyone should even be thinking about.
First things first, why are we even talking about a mortgage that lasts for half a century? Well, it's because for so many people, the American dream of owning a home just feels impossible right now. The numbers, they tell a pretty tough story.
Get this. The average age for someone buying their first home has climbed all the way to 40 years old. I mean, think about that. One analyst pointed out that this means the typical first-time buyer is basically as close to getting Social Security as they are to their high school graduation. Wow, that's a wild thought.
And on top of that, if you look at the median household, they're now spending almost 39% of their income just on the mortgage payment. Financial advisors usually say you should keep that around 28%. So we're way past that.
And a big reason for all this pain? These stubbornly high interest rates. For more than 3 years straight, the classic 30-year mortgage rate has just been sitting above 6%. And that's just locked a ton of people out of the market completely.
Okay, so that's the crisis. And this 50-year loan is being floated as one possible answer. So how would it really work in practice? Let's get into the nuts and bolts of it.
All right, so there are really 5 main things you need to know. 1, it's a fixed-rate loan. Your payment won't change for 50 years. 2, it'd be backed by the government, so it'd be pretty easy to find. But, and here's a big catch, the interest rate would actually be higher than a regular 30-year loan. Qualification standards would be about the same, and, this is important, you could pay it off early without any penalties.
And now we've arrived at the most critical part of this whole thing. This is where you really see the trade-off, It all comes down to the math, and honestly, the numbers are pretty mind-blowing.
Okay, so here's the bait, the big selling point. On a typical $400,000 home loan, you'd save something like $216 a month. And look, for a family that's struggling to make the numbers work, that could feel like a huge deal. But it comes at a tremendous cost.
And here it is, the catch. Over the full 50 years of that loan, you would pay over $400,000 in extra interest compared to a 30-year loan. Just let that sink in for a second. You save a couple $100 a month, but you pay almost $500,000 more over the long haul. And this table just lays it all out so clearly. You see that monthly payment column? Yep, you save about $216. But then just slide your eyes over to the total interest paid. It jumps from around $463,000 to over $863,000. I mean, you're paying almost double in interest. The math is just brutal.
So yeah, with numbers like that, you can bet the debate is pretty fierce. So let's zoom out a bit and look at the bigger arguments the experts are making, both for and against this whole idea. It's a pretty clear split, right? The pros are all about that immediate relief. Lower payments, more people can qualify, you get a stable payment, and you get into a house. But the cons are all about the devastating long-term picture. You're paying a fortune in interest. You build equity incredibly slowly, and you could literally be in debt for your entire working life. Oh, and it might just push home prices even higher for everybody.
And this quote just nails the expert consensus perfectly. Most economists see this as a Band-Aid on a bullet wound. It's like, sure, it might feel a little better for a second, but it does nothing to fix the real problem, which is that we just don't have enough houses for people who want to buy them. Now, here's another twist. Even if you heard all of that and thought, you know what, I'd still take that deal, there's a huge problem. A massive legal barrier is standing in the way, which means this loan isn't something you can just go out and get.
So to get why, you need to understand this thing called a qualified mortgage, or QM for short. Basically, after the 2008 housing crash, the government created these rules to define what a safe loan looks like for consumers. And these QM loans have extra legal protections built in.
And here's the kicker. The law that created all these rules, the Dodd Frank Act, says very clearly that a qualified mortgage cannot be longer than 30 years, period. So a 50-year loan would automatically be a non-QM loan. That makes it way riskier for banks to offer and probably even more expensive for you, which would just cancel out any of the benefits.
So you've got this brutal math problem on one hand and a huge legal roadblock on the other. The verdict here seems pretty clear. Don't wait around for this thing. Instead, let's talk about some proven options that are already out there today. Yeah, instead of hoping for some risky, high-cost product that might never happen, there are great tools you can use right now. FHA loans let you get in with a really low down payment. There are tons of down payment assistance programs out there too. And honestly, just working on your credit score can save you a fortune on a normal loan. These are real strategies that actually work.
So when you boil it all down, the conclusion is pretty hard to escape. The price you'd pay in long-term interest and painfully slow equity growth is just way too high for a small break on your monthly payment. For almost everybody, the math on a 50-year mortgage just doesn't add up.
And that kind of leaves us with the real question, doesn't it? If stretching out our debt for half a century isn't the solution, then what is? Well, all the experts seem to agree on one thing: supply. So maybe the question we should all be asking is, what's it actually going to take to build the millions of homes this country needs to make housing affordable for everyone?